right, so now the most important part to trading futures, or in general any particular market, that being options, forex, whatever it may be, I truly believe is understanding and grasping the overall direction of the market. Okay, the purpose of doing so, because that's what's going to lead you to trading in the right direction. You do not, I'm going to stress this, you do not want to be trading against the overall trend of the market. Yes, can you counter trend trade? If you know what you're doing, you probably can scalp, yes, for a few points at a time. You know, I do it from time to time, but I'm always mindful of what's going on surrounding price action on a higher base chart, making sure that I'm not close to any particular zone, a supply or demand zone. You know, if I'm looking to go short at any given time and the market is bullish on a higher base chart, guess what? I'm going to be taking a look to see what's resting right below to make sure that I'm not trading into any major area of demand. Okay. Now, again, what I want to say is this right here. Lots of times you'll see with the market on one particular chart, the higher base chart, maybe say, for example, bullish, but the lower base chart may be bearish. That's what kind of trips a lot of traders up because they try to figure out, okay, I know I'm supposed to be looking for setups off of the higher base chart or trading in the direction with the higher base chart on my lower base chart, but they kind of get a little bit confused and start scratching their head when they see the lower base chart trading to the downside, but we're still overall bullish in the market. Now, what I typically and highly recommend is just wait for the market to shift back around on the lower base chart, so that way you're in confluence and trading synced with the higher base chart. So that's if the higher base chart, for example, like right here, we were making structural breaks to the upside, right? Okay, so we're bullish now, right? So if we look here, we can see where the market was making higher highs and higher lows. We got a dip back here where it started to break structure to the downside, all right? And yes, at this point here, after breaking structure lower, but then we turn back around and we start taking out structure back to the upside, that infamous pattern that I talk about where we get the reversal in a sense, where it's taking out structure to the left and moving lower. So, for example, let's say that this right here was, this is a head and shoulder type, setup. Left shoulder, head, and then a right shoulder. So we're getting structure being broken to the downside, but then we turn back around and it starts taking out structure back to the upside, structure here, and we're breaking higher, making higher highs and higher lows. So this would be like a inverted head and shoulder setup in reverse of what took place here. So if the market is shifting and now we were once bullish, coming back bearish now, and now we're back bullish on a higher base chart, then I'm only going to be looking for higher base setups. Or I should be looking for, setups on my lower base chart in confluence with what's going on the higher base chart. Lots of people have a hard time doing so. What they try to do is they try to trade from one particular chart. Maybe it's the 24 range chart on the NASDAQ, maybe a 12 range chart on the ES, or maybe if you trade time-based charts, you're trading directly from a 5-minute chart. Is it possible to do so, meaning not trading in sync with the higher base chart? Yeah, it is, but you also, again, you do not want to be trading into any particular zone, meaning too close to an area of demand, too close to an area of supply that's sitting there on a higher base chart. Because if the market taps, for example, let's say, for example, you were going, let's just pick something right quick here. Let's say you were going short in this area here, right, on a lower base chart, right? All right, but look what you got here. You got it's a major area of demand right here. So maybe you took a supply setup on your lower base chart, but you got to be mindful and always be looking at your higher base chart to make sure that you're not trading into a higher base zone, okay? Because they're going to trump all. Remember that. A higher base chart is the chart that is a bigger chart, okay? So it's detecting more of the broader scope of the market direction versus the lower base. So that ultimately is the most important part, getting the market direction correct, right out the gate, okay? Now, I'm able to do this 5 days a week, trading the future markets in particular. I like the NASDAQ, the ES, the gold future markets, but there's so many other markets you can trade when it comes to futures, right? And I'm able to do so right from my own, office environment, from my desktop, PC, or maybe you have a laptop. You can do the same. You need to eliminate wasting as much time as possible, trying to figure out the direction of the market. You should be able to hone in and look at a higher base chart and immediately figure out which direction to trade. Again, if you're a beginner trader and you're someone new that's coming for the first time to the channel and watching today's video, figure out the direction of the market from a higher base chart. I use the 120 range chart that helps me figure out or determine a direction which way to trade first. And then I'll move down to my lower base chart and trade in the direction with the higher base chart. But today, say for example, I actually took a counter trend setup in a bullish market environment. Okay, why? I'm going to go through that trade setup today for our elite members. And if you're interested in becoming an elite channel supporter, the link is down in the description portion of the video, as well as the Discord link. The Discord link is free to join. To become an elite channel supporter, it's only $6.99, but that's where I really break down in detail these trade setups. Like for example, today this trade right here, I'm going to show you right quick. I'll bring it over the Discord window right quick, and it's right here. All right, this was the setup that I took today. 40 points moving to the downside. Okay. Now 40 points. Yeah, it's I'm not saying it's a rare moment, but you know, most times I'm looking for 20 to 25 point scalps on the NASDAQ future. Say for example, and that's what this was off of today. And this was actually a counter trend trade in a bullish market. But again, if you know what you're doing, and you can trade counter trend if you see great setup. So I saw the market on the lower base chart, you know, kind of breaking structure lower. But I'm going to go through that trade for all those that are the elite channel supporters. I'll break that down for you in the video today on the private community. And again, anyone who's interested in gaining access to the tons of trade breakdown videos, the video playlist, and a great video that I covered. If you're struggling with market structure, I did a great video covering that particular concept just as well. It's only $6.99 a month. I don't have a trading course or a trading program or mentorship program to where I'm charging hundreds of dollars or thousands of dollars like a lot of these gurus or people do. I'm just trying to make things as simple as possible in reference to the strategy and how I trade. Not telling anyone to trade just like me, but you know, if you're interested in understanding a simple way to trade, I pretty much break it down in so much of the video content here on this channel. So if you go through the videos, you'll probably kind of pick up on, you know, or gather some insight on the way I actually trade, because it's all about using multi-chart confluence. First and foremost, figure out the market direction. Secondly, mark up a higher base chart, the zone where the supply or demand, and the direction in which way the market is actually trending. Thirdly, I'm marking up from there. Once I mark my higher base zone off the higher base chart, I move down to my lower base chart to look for an actual setup within the actual higher base zone. And I'll show you a quick example of what I'm talking about, because a lot of people say, well, what do you mean a zone within a zone? Well, say for example, we'll walk through an example here in a second. But what I want you to understand first and foremost is getting the direction correct. Where we were once bullish, now we were bearish, now we're back bullish, okay? So trade in the overall direction of the market. Again, I'm able to do this simply and make money each and every day by simply identifying what's going on. Number one, it is the most important thing, because without mastering the concept of market structure and getting the direction right, you more likely are going to fail. I'm not saying you won't get lucky, but you're going to fail. You want to put yourself in a place of consistency each and every day. Meaning profitability comes from being consistent and also being patient as well. But no one can teach you patience. That's something you have to work on yourself, right? But like, say for example, today, if we're looking at the market, okay, and I'm sitting here, I'm seeing what's going on. I actually called out a setup today, I should say, right here. Beautiful breaker structure to the upside. Look, we're already bullish. Like, for example, we're bullish here, right? The market pulled back, okay? Now, this is a major high and major low right here. So we're in between this leg right here. So if the market breaks this major high right here, then it's breaking structure back to the upside. And even here on the higher base chart, you can see we got nice swings to the upside, a pullback, and then we get the break above this area here. So this is also a high probability demand zone, as well as this one right here is, okay? Because we got aggressive buying to the upside here, pullback, aggressive buying to the upside here, where it breaks structure here and it's breaking structure here. So if the market would have came back and tapped this zone, I would have went long, as long as we get the rejection or reaction, but not off my higher base chart. That's where I moved down to the lower base chart to find a zone within a zone. So, you know, this is a 120 range chart. I'm gonna mark up my higher base chart first, but then I move down to the 24 range once the market taps in this zone here to see, is there a 24 range demand zone on the inside of the zone. It's simple as that. The strategy is not complex. It's very, very simple. If you spend time watching the videos, you may not understand it the first time around, like watching this video, but spend some time watching the other content on the channel, because that's where I go into, go into more detail about certain things surrounding, what marks up a high probability versus a low probability setup, because people ask that all the time. I talk about that. I talk about structure. I talk about, going through some examples of setups where we have multi-chart confluence, higher base, lower base zones, where there's one zone within the other zone. But if you really want to understand and gather more information, where really the substance of all and how I actually trade and breaking these trades down, you may want to become an elite channel supporter, okay? You're supporting my efforts as a content creator and a trader as well, but I'm sharing with you how I do this each and every day. And we have people that are part of the Discord community that trade very similar to, have spent time watching the video content and have found success. And if you don't believe me, you can come onto the Discord and you can ask yourself, all right? We have people who have come and they're gone. I don't expect everybody to stick around forever, because once you have learned something, maybe put your own twist on it, and it's working for you, then that's fine, okay? All right, just move on. It's time to fly, right? You need to become consistent and be profitable on your own, okay? You can't sit here and be dependent upon on other people forever, right? I see that happen in so much video content on YouTube, for example. Everybody's asking the question, well, do you have a live trading channel, or do you trade live, or do you have where I can watch you trade live? People are just trying to copycat and piggyback off of the exact trades that people are actually taking, okay? So if you do that way, you'll never learn, okay? Learning comes with the not say idea, it comes with putting in the work itself. Back testing, forward testing, learning the strategy, learning the concept, and then putting it to work for yourself. If it doesn't work for you, then move on. I always talk about that. So, but in looking at today's market, for example, there were a couple areas in which you could have traded going along. Like right here, this was a push up, pullback, aggressive buying, comes back, high probability demand zone. Now this was yesterday evening during the Asian session, pretty much when after the market opened up. But this was a viable or a legit demand zone with an imbalance or gap attached to it. Anyone that doesn't know what I'm talking about, who's a first time viewer here on the channel, about gap or imbalance, they're the same thing, but I need to see that, okay, back at the supply or demand zone, because that's going to give me or let me know if it's high probability or low probability. Then we move to the upside here, okay, big push to the upside, push up, pull back, break higher. But within this big swing here, I know you probably see, well, what's that that additional move here within the larger swing, okay? This is a minor structure breaker to the upside, okay? So we got a push up, a pullback, aggressive buying to the upside. So there is a demand zone resting right here. Not the red box, okay? The blue box here, okay? With a gap attached on the zone. So the market came back here. This is during London. Now, if you were up trading during London and you saw this right here and you were able to see maybe there's a 24 range zone, or maybe you trade some other lower base chart where there's a zone within this higher base zone here, and you get the rejection or reaction, take the shot to go long. If you did, and you traded this zone here during London, then boom. I always talk about that some of the best setups come before the actual market opens up. The U.S. market or the New York Stock Exchange opens up. Even during London. London is a great session to trade because a lot of volume comes into that session or that particular market, around 3 o'clock in the morning. So, leading up to or right before the New York session. So I always talk about pre-market sessions, okay? London's one, and then maybe somewhere between 7:30 on up to, before the market opens up. But again, the market pushed up here. Then it came back, as you can see here. I'm kind of walking through structure of the market as I'm sitting here going through this. Makes a low, lower high, breaks lower here. Yeah, this is the breaker structure right here, okay? But down to the downside. But I don't want to trade this area here because this little swing, this right here, you see right here, I need to see swings where the market is breaking below an area structure back within the swing, inside the swing, not sitting on the outside of the swing, okay? When the market came down right here, this area here, this little swing right here is resting on the outside of the larger swing right here, okay? So if I was to show you this right quick, just picture this. Swing down, pull back. This is the swing. This small swing here is on the outside of the larger swing here. So that's why I marked it with the red box right there. I did that intentionally to show and let you know that no. erased it, didn't I? But anyways, that is a no-no zone for me. You know, maybe you would trade it, maybe you wouldn't, but for me, it's not because of. Let me move this away and do away with this right quick. Because it sits outside of the actual swing is what I'm talking about, the larger swing. All right, so then the market. Let's go ahead and I want to make this outline. No, the color of the area. So then the market turns back around, right? This is where the market breaks back higher. Okay, so we got where it makes this high here, pulls back, and then we get a big swing to the upside right here. Now, yes, ultimately this is a push up, pull back, push higher. Okay, aggressive buying, market dips back here, and then we break structure to the upside. This is a demand area here. That's why I marked it there. There's a gap attached to it as well. What's the gap at? Okay, let's see here. Now, actually, there's no gap here. I'm sorry about that. If I said that, there is no gap. I just took a look at it. There is not a gap. This is a low probability zone here, but that does not mean that the market will not reject off the zone. Let's say the market comes back to the zone. I did have it marked up because at this point here, and the reason why I have it marked up, even though it's low probability, the reason why is because the market can still react off of a higher base, low probability zone after it's, if the zone's already filled back to, if it's already filled back to the zone, okay? So what we're looking at here, I'm going to say this right quick. You see where this is a push up, okay? Aggressive buying. Broke this above this area of structure. But when the market broke above and made this little move right here, a lot of people ask this question right here. Made this move, pull back. You mark the zone like I did here, but this candle here pushed up and broke above. The next candle, the wick of it came back and closed in any type of area back to the zone. So it's low probability. If this candle did not right here come back, but this candle here pushed up after we got the closure above, the very next candle, if it didn't swing back but kept pushing higher and to come back and tap the zone, then it would be a high probability zone. But it did. So it's a low probability zone. But what I'm trying to say is that the market comes back to the zone right here. All right. This is where I'll move down to my lower base chart, my 24 range chart, to see if there was a zone resting on the inside of this zone here. Okay. And it needs to be, in this case here, because I have a low probability, a higher base, 120 range demand zone, I need for sure to have a high probability 24 range zone. But unfortunately, the market, here, it didn't come back, and touch this zone here. It made a lower high here when it came down right here, and then it pushed back to the upside here. But there, right here was another demand zone, okay? And it pushed up there, aggressive buying, taking structure out here. So breaker structure, beautiful area. And then just for example, I'll show you right quick. Let's say if the market did come back. So I'm gonna draw this up so people can see. So this was a push up, pullback, and then a push up right here, right? So if the market comes back and taps this zone here, okay, and we see that take place on our 24 range chart, all right, which it didn't though, but let's say it did, then I'll be looking down at my lower base chart, okay, and this would be the area that I would be focused in on right here, okay. So this would be this is the high that it made, and if it came back right here, tap into first the 120 range zone and then the 24 range zone. Okay, I'm looking for the zone, a smaller zone with inside of the larger 120 range demand zone. So if it came back here and touched this zone right here, why this zone here? Also because it's a high probability zone resting here because there's a gap attached to this small area right here of demand right here. Okay, the market had pushed up, nice aggressive push to the upside, pull back, all right, and then we get the break, moving to the upside, aggressive buying going higher. Okay, so if it comes back to this zone right here, I'd be interested in this area here if it did that. Okay, but it didn't. What did it do? Pull back some and then it pulled back a little bit and then pushed to the upside. Now if we look at this, is there another high probability zone or demand zone or zone resting right now? Yeah, there's one right here. Aggressive buying, okay, pull back, and then we get more buying to the upside. So there's another demand zone right here. All right, so I'm going to go ahead and delete this one here because to me, not to say it's not invalid or anything, but it kind of is because now we've got multiple zones. But you have to be careful when the market starts pulling back because it can tap this zone here, but it can break through it as well. Why? To fill gaps coming to the downside, all right? The market has to mirror itself. It has to fill in imbalances coming back down or either going back up. And right now, it's been very bullish to the upside. So it can come back, reject this, and then push higher, or come back, reject it, make a lower high, and then come down, start filling some of these gaps in. We never know. Our goal and aim as a retail trader is to trade based on, first of all, structure, what we see going on, confluence, getting multiple. The more confluence we have, the better the trade is probably going to work in our favor. And this might be a good area to trade from. We never really know, but because there could be multiple areas of confluence. Right now, I see, all right, it's a high probability area where the market broke structure right here to the upside. It pulls back here, but we also have a half number, 55, of the 550 area. And we got a high volume area here where the market's built some volume at. There's multiple means of confluence right there. But the ultimate thing that we really need to identify once it touches the zone, or right now before it does, is there a smaller 24 range zone resting on the inside to give us multi-chart confluence, higher base zone, and then that lower base zone on the 24 range chart. So that's kind of what I wanted to cover today, and just let you know this is how I go about making money 5 days a week, pretty much, just like as if I had a full-time job working wherever else. I'm able to do this comfortably from my home office. All right. So I'm trying to kind of curve the edge for a lot of you folks out there that are watching the content, trying to understand the strategy, so that you don't have to waste like 90% more of your time, going out here scouring the internet, trying to figure out, does this work? And then you're burning and wasting money and time at this in the same instance, right? So I'm trying to kind of curve that edge for a lot of people, and I know not everybody's probably going to get it. It does take some people longer than others, and there's nothing wrong with that. But I try to make it as simple as possible in making this content for people, because the strategy is very simple, okay? Again, if you want to become and you choose to become an elite channel supporter, look, the link is down in the description portion of the video. It's very inexpensive. It's only $6.99 a month. And again, I'll walk you through trade setups that I take, ones that I post over in the Discord, so that you can gather a grasp and understanding of why I took the trade setups, why and where I placed my stop loss, where I placed the profit target areas, or where I'm aiming for, okay? As well as walking you through the setup, let you know why I took that trade, surrounding structure, looking at the zones. We'll look at the whole thing as a whole, okay? The link is down below. Outside of that, that's all I have for you guys. I appreciate everyone tuning in each and every day watching the videos. If you're a beginner, not say beginner trader, I should say someone new to watching the actual video content for the first time today, please take the time to go ahead and subscribe by clicking on the sub button down below. Make sure to turn your post notifications on once you click the subscribe button. And last but not least, if you found value in today's video content and this in some way or somehow maybe opened your eyes up a little bit, helped you out a little bit more, or at least for you to say, hey, I'm going to watch some more video content because I want to learn this, please make sure to drop a like on the video. I definitely and greatly appreciate it. Take care.